If you're not a subscriber to the channel, guys, be sure to like this video, share it, follow me for your market updates of Central Ohio. This is your Central Ohio market outlook for the remainder of 2025. This outlook dives deep into the real estate trends, interest rate forecast, and tariff impacts shaping the Central Ohio market through the end of 2025. Central Ohio home prices are expected to continue their modest upward climb, with the projected 4% appreciation rate for the year. Values may reach $350,000. Remember prior video where I went over the market update for 2025. The median sales price in Central Ohio was $335,000. So it is still projecting a 4% increase beyond where it's already increased to for the remainder of the year. Again, this is just a projection. It's not my projection. It is just a projection that I can kind of understand why they're coming up with this projection at. Inventory has increased by over 35% year over year, but buyer demand remains constant, creating a healthy, balanced market or environment. So this is kind of showing the market trends of price point and how we're going to get up to that $350,000 mark by the end of the year, or very likely could. The interest rate forecast, guys. The mortgage rates peaked early in 2025, but have started to ease. The 30-year fixed rate currently stands at 6.67 and is projected to gradually decline to around 6.45 by the end of the year, depending on Federal Reserve policies, shifts in inflationary processes. Again, this shows the trends. We were close to that 7 mark. It is now projected to be down a little bit below that 6.5 mark. The tariff impact on the market. The new 2025 tariffs on steel, aluminum, and auto imports have added an estimated $10,000 to $12,000 to the cost of a new home construction. This has slightly reduced new housing starts, constrained supply, and shifted a lot of buyers in the market to look at existing home purchases instead of new home purchases. So again, it's helping support that resale value of your home. While tariffs have increased inflation and weighted on the Fed rate cut timing, they've also sparked manufacturing jobs and growth, specifically in Ohio, which supports regional income and buyer confidence. So, the home price outlook, another 4% increase by the end of the year. Mortgage rates are expected to drop about 0.3%, which is not horrible. Inventory is currently up 35% year over year and should remain elevated into quarter 4, depending on new homes and buyer activity. I could see it actually dropping down a little bit. The tariff effect, higher material costs, moderate, so not low or not high, moderate, so medium construction slowdowns. Buyer activity, steady but cautious due to rate sensitivity. The Fed policies, there's no cut in July. The next possible time should be around September, where they evaluate and potentially lower interest rates. And I say potentially. So, strategic advice by audience. If you're a buyer, take advantage of the increased listings right now. People want to reminisce about what it was 2 or 3 years ago when their house would be listed for 48 hours or less and they'd have multiple offers. They're not getting that now. So if a house has been on the market 20, 30 days, a lot of these sellers are a little bit more willing to negotiate with you to get you into a better rate or get you into their house. That way they can move it. Sellers. I can't say this enough. Get with an agent who's an expert, not in when it's a selling market, but in all markets. They need to highlight strong pricing, demand resilience, and act before rate shifts slow offers. If the rate goes down, offers may not be as advantageous because if the rates go down, it could flood the market with sellers too. Investors, tap into the rental market. Rising rates keep first-time home buyers on the sideline. So you're going to be able to cabbage on and pick up a lot of those investment properties to help build your portfolio. Builders, consider scud projects, local supply sourcing to counter the tariffs. Lenders, my advice, push pre-approvals and locks, educate on refinance options and opportunities next year or even the year after, depending on what rate does. Just because someone gets into a 6.7 today doesn't mean in a year they can't be in a 5.5 or a 5.7. Educate first-time home buyers on how to refinance their home later to save money. That's all, guys. Like the channel. If you need real estate help, give me a call. Ben Bailey, Century 21 Capital Gold, 614-397-7353. Thanks.